Hi, welcome to the very first episode of my journey, or I would say the PhD FX podcast or the Forex PhD podcast. And in this particular episode, I'm going to be showing my trades for the month of January. I think January 2024 was quite a good month. I've been working on my strategy, and I think I've come up with a way to get get some means from the market. And so really, just to let you see, the very best thing about the strategy is I have a monthly target of about around between 10 and 12% monthly. Then I took an example from the betting lifestyle, and I know we a lot of people discuss that the foreign exchange is not gambling, or gambling is different from foreign exchange. But I had to think like a gambler, and this is how they think. Yes, you want to probably use $1 to get, let's say, $100,000, and that type of game or gamble comes only once in a while. But when you use, let's say, $1 to get about $5, then that is a meaningful gamble, in that sense. So you are restricting the games you're picking. For instance, in sports betting, you are restricting the games and the odds to smaller odds, but very large amount of money that will help. So the way I trade is very easy. I try to raise 2% of my account. I target a 1 to 3. I have the mechanical strategy I built myself, and then I target 6% on my first trade, and probably on the second trade another 4 to 5%, and I'm done for the month. So if I have 2 good trades, consecutive good trades early in the month, then I'm done. But sometimes, as you know, would have down times. But let's see what January had to offer. So let's jump straight into the chart. So you see what I did and how I took the trade. For now, I don't think I have a set of videos where I teach the strategy. But if you follow the podcast and my journaling process, you should be able to take the trade. So let's go into the chart. So I'll just restrict this. I'm sorry, my chart is a bit messy. Messy. It's full of mess. And so I kept this. I journal on this chart just to see the data I have. And let me just take it to the 2 trades. So January was a pretty good month. So usually I just check a 6-hour time frame. I mark out my zones, and from there I go to the 5 minutes, and then I take my entries from the 5-minute time frame. So let's see how I took the trades in the month of January. Okay, so this was the trade. So I had the zone marked out this way. Just take it out. So I had the zone marked out. So on the 2nd of January, like boom, that was like early on into the year. And so this is how I think. So usually, if you look at it, I had the zone. When markets came, I think my entry strategy is really, it's out there. I think a lot of people enter the trades like this. And so I had this high. Usually, I had this high, and I had the low of the last candle. And so I was looking to, sorry for that. So I was looking to get, so what I try to do, I don't wait for, I know you have a lot of entry strategies, break of structure and stuff like that. When I get into my zone, I just have 2 confluences I'm looking for. If the price has gone in, so the first confluence, let's take it one after the other. If the first confluence is met, that price has gone way past 30% of the zone, then I will just look for an entry on the last down candle. So I'm taking an entry on the last down candle if I want to take a buy, and I'm going to take an entry on the last up candle if I want to take a sell. And so this was how it went. I expected that price should trade above this in a way, but no, price did not go there. Rather, it went down. So I had my entry at this point here. Let me just change this to red. So I had my entry there, and then I target 1 to 3. This was 14 pips stop loss. So I just put in, so usually I use buy stops, either buy stops or normal the buy limits, but this is a buy stop I used here. And then boom, it's ran straight. Sorry, this is a lie. This is 14 pips. It ran straight to profit around this region. So again, I set it and forget. I'm not one to probably check and see if the market is going up or down. No, I just set it and I close the chart. And so this went my way 1 to 3 early in the year, which is a good way to start the year. And then the next trade, so again, I was looking at taking a trade on this particular day. Let me just bring this out. So I was looking to take a trade on this particular day. I did not take this trade because I had these lows. Usually I have the pre-New York session. I'm a New York trader, as you can expect. So I marked out the pre-New York sessions. And so I expect that there should be a sweep of liquidity before I take a sell. So I was waiting for a sharp take of liquidity here, and then we took this next one, took out the zone. Then I did not trade on that day, and this one too took out the zone. This zone was taken out even before the session started, and so I could not trade. I think the same issue here too. You had a trade away from the zone. There was no zone to trade from on my 6-hour time frame, so I did not take that trade. This one did not tap in here. I did not take the trade. So again, I take only one trade per day. As I said, I'm aiming for the best probabilities, just like a gambler. I wait, and I risk quite a lot. I think 2%, and then if I get 6%, or I get 4% when I have my 6%, then I'm done for the month. Again, I target 10 to 12%, 10 to 12% on an account, or better still, I target 5 to 6 RR. So I think that's the best way to see it. So RR, for those who might not know, is just risk to reward ratio. So it means in a month, in a whole month, I'm just trying to get 2 good trades to have 6 RR. Then I increase my percentage. So for the accounts I plan to flip, of which I will start soon, I would be risking 20% of the account. And so at the end of the month, I hope to get like 120%. You can see how good that will be. So it's like you're waiting. I'm waiting for my setup. I don't do anything. I'm not emotional. I'm emotional. Not like I'm a human, but I've taken out that aspect of it because I have my data to support how I trade. So this came to the next day. Again, we see this low. That was created during the pre-New York session. So I have the first confluence. You have a takeout of structure, and then market came into the zone. But notice from this first, tap into the zone. Let me show you this. So from this first tap into the zone, it did not fill up to 30%. And so once I don't have this confluence, once I don't have this field, what I then do is I watch out to see if there's any fair value gap. So notice from this, I had this big push, and then this third candle did not close the gap. So once I see a fair value gap, I will just take the trade from there, which is very close to the zone. I'll take the trade from there, put my stop loss below the zone. Below the zone, which is about 34 pips, and then I target my 1 to 3. Now those are the 2 trades I caught for the month of January. Again, I'm a PhD student, so I try to get just minimal setups that would just give my portfolio a good profit for my investments. Really, that's it. And I think it's just a simple strategy that you can implement, even though I'm not giving all of how I get my zones. But I think the whole mechanical system is have a mode of entry, have a mode of getting your zones, know what you're going to risk. I think because of my background, I'm an engineering grad student, so I want things to be definite, and so that's why I just have it as 1, 2, 3, and I'm done for that day. 1 trade per day. So again, in the whole of the month, probably about 20 trades in the month, and I'm done trading. So yeah, thank you again for joining. I'm happy, and I'm sure you must have gotten some good knowledge from this particular podcast. And please like, share, subscribe. Again, until the next time, stay blessed. Bye.